But we'll let Ari finish up, and everyone, thanks again for coming, and big, huge round of applause to Ari so far. Thank you.
All right, so yeah, I'm just going to go over some kind of like more specific TA things in terms of patterns and basically the most actionable things you can find on the charts, and then I'll mention a few more things about leverage trading, and that'll be pretty much it for today, hopefully. So I already mentioned that big wedge pattern that we were looking at that I said was quite bullish. And this big wedge, right, someone reminded me that I promised I would explain this one a little bit more. So the way I was drawing this wedge was something like this. And this is a really kind of big, long downwards wedge, but as you can see, I cut off this bottom part, and this is where the kind of like less technical part of TA comes in. Basically, you always have to use a little bit of judgment calls and a little bit of like your own sense of which part of a market movement is really significant and which part is not. Because if you look at this kind of pattern, it took like almost 3 months already for this wedge to form, and it's still kind of like staying within this wedge. But this part going outside of this wedge, why I believe it's not significant and why this wedge is still valid is because if you remember, this was basically kind of like a panic, sell everything, just kind of sell kind of thing. And that's not really, how can I say, not really a very useful indicator in the long term, because this is basically a market overreaction. Like if you were looking at any kind of like communities, any kind of trading subs on Reddit or whatever, everyone was basically, like not everyone, but a lot of people were saying like, you know, Bitcoin is dead, just sell everything, this is the end of all crypto. But that's not really a realistic assessment of the market. So in the context, it makes sense that this is not exactly a significant kind of a move, considering it only took, 2 days to completely get out of that dip. So it will happen quite often. And actually, if you use the 3-day chart here, you can see, again, this looks like, everything is still in the confines of this wedge. If it breaks down again, then you could say that, this wedge is no longer valid. It is a serious breakdown. And also that actually is something I was going to mention earlier. If we see a price going down like here, there is a common pattern in TA that people talk about, which is called double bottom, which would look like this. Like if we set, the same bottom price, 6,000 here, and we hit 6,000 here. If that happens, technically that usually means a big bullish turnaround, and it's a possibility. But actually, in reality, just like with the double top I mentioned earlier, Bitcoin actually never in its history had a successful double bottom. Not even like if you go back all the way to the time when Bitcoin was founded. If Bitcoin goes down to a specific price, let's say here $6,000, if it ever comes back to the same price, not just within like few percent, if it stops, 2 or 3% above it, it's still okay. If it actually goes down to the same price, every single time in the past that happened, it broke down further. So here, if I saw, this price go back down to that 6,000 level roughly, then yes, I would say it's likely that this wedge is actually false and this should have been excluded. This pattern doesn't work anymore and we are breaking down further. That would be my expectation. But this is kind of like analysis inside of analysis you have to do sometimes. You can't just, say, well, this part is sticking out, this is not the pattern anymore, because it's possible that this was just one big overreaction. You can count on that. But also, you can't say, this is like, how can I say? You can't have complete confidence either that this is a proper pattern or not. It's always kind of like a gray zone. It's just there to help you visualize which is a good level to buy, which is a good level to sell. And that's all TA does. It never actually predicts things completely. So saying that, like I promised, I was going to look at some more specific patterns. So here are some of the recent things we saw. Here we can see what's called a bear flag. A bear flag happens when the price has a significant dump and then kind of stays along, this kind of range. Here, this is actually kind of like a really, really weak and sad bear flag because the price doesn't even bounce up to this level. Normally in a bear flag, you might see moves all the way up here. But if you were selling, anywhere prior to this level, and you saw the price go up here, you would actually be completely comfortable with it because it's still this kind of bear flag pattern. And in this bear flag, what happens is, again, if it breaks up, then you close your selling positions. If it breaks down, then you're happy. You can expect the price to move this kind of distance. Again, as always, you usually measure, the top and the bottom of the pattern, and that's the next move. So here you can see this bear flag broke down, and just as expected, it moves this similar distance. And here, it's actually kind of forming a similar thing. Again, we have this kind of flag base, and this top. If you were trading this would be the level you put your stop losses at. This is the level you look at where you will actually make profits if you're in a short position, a selling position. And again, this thing breaks down. But now you can see, this breakdown didn't actually have this kind of a big panic dump. It just kind of like trends slowly down here. But that's completely okay for you if you're a short trader here. If you're just sitting in your short position, you're just waiting and waiting. You're waiting for, you have this flag bottom, which is actually serving as resistance. And you can see this price, it went down a little bit. It tried to go back into this flag, but it never did. And then it goes down. And here again, eventually you kind of run out of buyers. And here again is this breakdown. And again, you can look for this kind of similar thing here after this big dump. Again, you can look at this kind of a pattern all the way while the price is bouncing here. If you sold your coins, if you're in a short position, again, this is your next stop loss level, the previous, that flag base. And here is where you look for profits. If the price goes below that, you can start actually either buying your coins if that's what you're doing, or you can start closing your short position, your leverage short position if that's what you're doing. But this is, below this level is where you slowly start taking profits. Above this level is where you would take a loss and close your position. And now, the good news for Bitcoin from here is that after this breakdown, we actually don't really have that kind of a clear flag formation. Technically, it could be, drawn something like this, and this is what many people were looking at. So here it kind of stayed in this flag, but it didn't really go down much from here, and eventually it actually did go up somewhat. So here, if you were trying to keep trading the same kind of formation, you would actually just close your position here, most likely. That would be the safe thing to do. Even though eventually this price actually did go down, it kind of like worked out for anyone who was selling. The safe thing to do here would be to just buy or, close your short position depending on what you're doing. Because the probability that it will actually keep going down here after this breakup is not that high. But, if you were trading based on this kind of, these little flags, what the hell, okay. So if you're trading based on these little flags all the way down, you're looking at, almost $1,000 profit here, here, and then here, eventually you close this at a loss. Overall, you're still going to be up at like, $3,000 per Bitcoin in profit, maybe $4,000, depending on your positions. And the whole time, if you follow this kind of pattern, you will actually be really safe. Like at any point, after you close your first trade, after this first flag, if you even closed it, or, you didn't even have to close it, you could just move your stop losses. You're always kind of like in profit after this first move worked out for you. The worst case scenario for you here is that you will be maybe close to break even, maybe you only made a couple $100 if, price turns around at any point. But as long as you keep your stop losses properly positioned, following this kind of pattern, you would be doing really well for yourself on this kind of move down. So that's really, again, goes back to, having a plan and executing it. That's really how you can survive this kind of bear market. This next thing I wanted to show you is called head and shoulders pattern. It's, wait, where was it? It was, I think, here. Yeah. So this is another really commonly traded pattern where you have kind of like a rise, and then it goes down, and then another rise, and then it goes down again, and then another small rise. And this is kind of like, you can explain this psychologically really well. People are trying to buy, but there is not enough interest, so the price goes down. There is one more attempt, which always has to be higher than the previous one for that pattern to be valid. And then again, you see there was not enough buyer interest, so again, the price went down. And then this part is a bit wonky. It could be a bit more straight for that pattern to be really good, but still, you can see that there is buying interest, but it just fails to push anywhere upwards. So eventually it breaks down, and that's kind of the confirmation of this pattern. So here, again, after this blue line breaks down, you could enter a really safe trade on the short side, like selling and then taking profits when the price goes down. Again, if you look at how it worked out, obviously after it broke, again, we have the same kind of distance from, base of the pattern, top of the pattern to the base of the pattern. And here, this 7.5, 7.8 thousand level is where you would be taking profits very safely, very comfortably. Again, you don't have to stay in a trade for a long time. You don't have to do any magic. You just enter a trade, set a stop loss. Even if whatever happens at night when you're sleeping, you're completely fine because it's all basically set positions. You're not using market orders. You're just using limit orders all the time, which will execute wherever the trade goes. You always have a target, both if the trade goes for you and against you. So that's the beauty of using TA, really. It gives you this kind of confidence. And the other thing that you should be looking at, like for example in this head and shoulders pattern, which makes it a lot more comfortable to trade, if you look at the volume as the good indicator, you can see that, every time this sell-off happens, there is so much volume. So you can see, when the price is kind of moving down here, the volume is low, there is not that much interest. The only times there was a lot of volume, kind of a lot, is when the price was going up. But as soon as it kind of reaches this high level, there is nothing. So you can already feel that there isn't that much buyer interest. You are looking for that kind of trade entry already. You can be already ready for what can happen. You can kind of expect this kind of breakdown to happen. And anyway, you can see the same thing with volume again on all of these small positions, small moves. Like everywhere, whenever the price seems to be making a recovery on this move down, it's always just this really, really low volume and not much is happening. And that's how you know that you're really on the right side of a trade here if you're the one selling and not buying. And I think that's more or less basically what I wanted to cover. I do wish we could go even more kind of more specific things, but that's probably not very useful in a meetup with a lot of people like this anyway. But I do want to say that I do a lot of trading myself, both short-term and long-term. And I'm very happy to always help with any questions, especially regarding leverage trading, which can be a bit scary and confusing for newer people in regards of coin picks or any kind of TA strategies. You can always talk to me on the Crypto Korea chat, or you can add me on KakaoTalk, but I don't remember my username, so you will have to ask me later. But just if you have any questions, if you're new to trading and you want to try and get started, if you need any advice with exchanges for that or whatever, give me a shout anytime. I can be slow to respond because I'm actually kind of busy these days, but I will always get back to you within a day or whatever, and I'll happily try and guide you to some big riches BitConnect style, or maybe not.
I have one request. Can you say Goblin Town for us, please?
Goblin Town?
You're always talking about...
Yeah, Goblin Town, that's where we are, man. That's literally where we are now. But we might go deeper. You never know.
I'm going to say it with Coswogglings.
Yeah.
Goblin Town! Okay, that's the best I can do, I'm sorry. Yeah. Please don't. I'm famous enough already. Okay, so
open the floor up to any questions or discussion. We don't want this to be a one-way street, so open the dialogue.
Yeah.
If anyone has any critiques of what Arya said,
any comments, if you hate me or anything, go ahead. You can talk here, or you can talk to me later on Crypto Korea chat. Anytime is fine. So
All right. Ali, I think you wanted to say a few things.